Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 21st, the day after FOMC. It's usually a pretty tricky day, very difficult day. So if you are frustrated, if you are irritated about the market and how it's behaving, we are at all-time highs. We are kind of choppy, up, down, up, down. Everyone is just buying high in prices, expecting to go even higher. So this is a very difficult situation. But in this video, I will try to provide you some insight about my experience, my point of view about what happened and what is happening right now in the markets to maybe give you some advice and recommendations moving forward for next week and how to trade in the upcoming weeks. So in terms of fundamental, yesterday, basically, as you all know, we got the interest rate decision. We kept the rates at 5.5. And the important thing was the projections for the famous dot plot from the Fed that basically showed that everyone is expecting on the Fed 3 rate cuts, the same as in November last year. So 3 rate cuts starting maybe in June is what the market is expecting. And that's why median expectations was bullish for the market. We rallied yesterday after the press conference. But today, it's basically a new day. We are holding, as we are going to see later in the charts, we are holding levels. There's no pullback. You have to just buy all-time highs. And let me tell you that that's not always a good decision in terms of risk. And when you have enough experience in these markets, you know that you have sometimes it's super difficult, but sometimes you just have to sit tight and see the price action go without you, because that's the best decision for the long term. For fundamentals today, initial jobless claims came a little bit higher than, a little bit lower than the previous one. We were expecting, obviously, an increase because the labor market still remains a lot of strength in the labor market, and continuous jobless claims, the same thing, going lower. So labor market, I think this is not a check. This is barely a meh. We need to see labor market and employment going higher, labor market going softening, so claims going higher. So it is what it is. The rest of the information today came in the line of global composite PMI flash for March. This is an estimate. Look at these services, 51.7, coming down from the 52. That's the only decent news for today in terms of inflation. But again, the data still shows a US strong economy, 52.2 in the composite, and manufacturing PMI 52.5. So around the same levels as the previous one. And look at these home sales, 4.38 million. We were expecting below 4 million, and month over month 9.5. Wow. So this is a really difficult situation. The US economy remains strong. Everyone is expecting a soft landing, but at the same time, we are fighting inflation. So the economy needs to struggle. We need to suffer and feel the pain of these higher interest rates. And there's no way we are going to continue seeing this. Even either the market accepts and pulls back, but the economy, the strong economy, will push the market up. At the same time, push the prices even higher, so inflation will not come down. And we are in this situation in which there's no way we can continue like this and pushing all-time highs without breaking something. The Fed is not worried about that yet. It's still expecting 3 rate cuts because at some point they still think that the economy will suffer, will feel these high interest rates at some point. But as you can see, we are far from that. This is yesterday's consolidation, the move higher into the FOMC, and then today It's just higher, 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 and finally a pullback. I was watching this pullback. Why? Because there's no way I'm going to buy up here. There's no way I'm going to buy at this zone. I was expecting at least reach this pivot, this zone of liquidity, or even pull back yesterday's fair value gap into the close. That is, this blue dot line is last week high. So this was the area I was waiting to buy long and hold for a retest of all-time highs. But what happened? This is a 15-minute chart, by the way. What happened? So, I mean, this is the 1 minute. As you can see, the price action during overnight is just pushing, buying. This pullback was at least, hopefully, will provide you some kind of better pricing, but I was looking for lower pricing because at the end of the day, if you check the 15-minute, you are just in this move, you are buying up here. So there's no way you can ignore this kind of risk. So as you can see, I got the fib retracement down here for even a deeper pullback. That didn't happen. That never happened. So into the open, we got this squeeze. We took the all-time highs. This was the all-time highs on the Nasdaq. On the S&Ps, we were far from that because the all-time highs were reached yesterday. The S&Ps piggybacking on the small caps and medium caps and all the banks that are deep in the green today is just stronger than the Nasdaq. So Nasdaq, I was waiting for this move. My plan was to catch a deep pullback for a move into the all-time highs because that was so near that it's most probable we are going to test that. But we tested that right before the open. We trap a lot of longs and then we start chopping around and consolidating. And as you can see, we are in this range. We are in this range without doing anything. And this range is basically, it's quite small. It's 75 points of range, even maybe 90 points if you take the entire range. So we have to, I think, my opinion is that investors, even traders, they're not willing to buy up here. Because what is the risk? What is the reward? Just 18,300 perhaps? But the downside risk is just huge. So unless we see a deeper pullback, there is no way investors, banks, funds, day traders, there's no way they are going to jump. I'm not jumping in. Maybe some scalpers would like to trade this price action. I'm not willing to trade this price action. So we just have to wait. There's no other option. Other things interesting. This is the dollar. With dollar this strong, I'm not comfortable also buying off at highs because this looks like a lot of people is just still continuing rotating into the dollar. This is a bullish engulfing candle after yesterday's FOMC, which pushed the markets to all-time highs. I'm not buying this. I don't trust this. Gold is just ultra volatile. Look at these moves. Because yesterday's big rally is just consolidation and then the pullback. Gold, perhaps, I think gold has still potential to the upside. This is not the same kind of asset. This is a commodity. But the Nasdaq, I was waiting for that exactly to just pull back a bit and take some opportunities. On Monday, I got $4,000. On Tuesday and Wednesday, I think it was 1,200, something like that. So I'm not willing to risk anymore this week. I'm okay. I'm fine with the profits. And I always have to think about risk management. And this is the kind of day which builds, which improves those skills for you that will come very, very in hand in your future, in the long-term career of trading. So if you today are sitting tight, if you are seeing this price action and you are thinking, I'm not buying this unless I got a better price, I got a pullback, I see some structure that can provide me some pivot, some risk management, some form of minimizing this risk that is buying all-time highs. If you are thinking that, I think you are mature enough and getting a part of all those traders that are not successful. So don't be frustrated. Just think for yourself that you are improving if you are really seeing this price action and you are not seeing what you need to see to jump on this. As I was saying, dollar is super bullish. Yields, the 2-year yield and the 10-year yield are in the green. So, and all this is the futures for the interest rates futures. This is the 5.3 in May, June, July, and September. All are in the green. So the higher for longer, the rotation into the dollar, and the rotation into gold, small caps trying to push higher, rotation into small caps. This is actually holding the S&P. The S&P is stronger, but look at this chop. The Nasdaq is feeling the pain and it's not pulling back. So as you can see, it's not easy trading. There's a mixed bag on defensive assets being higher, risk off assets being in the green, and at the same time we are trying to hold and push all-time highs. Something is wrong here. So that's why you have to think about what is happening and what kind of price action we are seeing up here. What is this? This is just a okay to the moon. That's not how I trade, and that's not something you have to think. You don't have to think about that. You have to think about what the market is telling to you. If we were so bullish, if we were in a range with some structure, with fair price, good value, and good fundamentals, we were just not getting this price action. We will just continuing higher with good pullbacks, good price action, not this kind of chop of unbelievably overbought value and without any kind of pullback for anything. There's a lot of money on the sidelines. At the same time, Nvidia is trying to push all-time highs again. 2% today for Nvidia. And the big one, Apple, is just having a pretty bad day, 3.70, and it's actually dragging the market down. Why? Because as I'm going to tell you, the Department of Justice sues Apple over iPhone monopoly in landmark antitrust case. So Apple is feeling the pain a lot due to this. So once Apple starts to show some kind of bounce of the lows, maybe you can search for some scalps into Power Hour. But if I were you, I wouldn't touch this market until tomorrow. Wait until the dust settles down and reassess the situation. This is not price action that you want to trade. This is not a market that you need to buy. You have the option to just wait for better price, wait for structure, wait for a way of moving into a trade, thinking about risk management. This is just pure chop, pure FOMO, and there's not enough money in this market to buy this high. That's why a lot of money is in the sidelines. And if that money decides to go out of the markets, brace yourself because there will be a lot of red in this market. All-time high is super tricky, and this is not something that I'm willing to trade. And I recommend you to really think twice about how the kind of setups that you are willing to accept in this market. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel by subscribing, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember, the trading day is not over yet. We are just seeing chop after chop after chop. Be really careful. And remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.